Hello traders, Gary Wagner with the Gold Forecast here. It is Monday morning here in Honolulu, Hawaii. It is November the 8th, and this is the Daily Report. We do have a nice little rally going on in gold currently. 1403, that's right, 1403.52. Puts it up about $9, $10 on the day. The interesting thing is we do have strength in the dollar again. Dollar is trading about $7 lower as it compares to gold, and predominant buying is raising the price of gold about $16. Today's report, we're going to talk about some upside targets. We might look to actually revise those targets, and I'm going to talk to you about the rationale and the reason behind that revision. That revision would be, of course, to the upside on that, holding a higher target for gold. And we'll also talk about the current position that we have and the stops that we have. It might be appropriate to take a look at raising those stops at this point. We'll do that all on today's Daily Report. Traders, you can recall from yesterday's report, Sunday's report, that what I talked about was that what we really need to see was this $1,400 mark right in here turn from resistance to support. I always look at resistance and support as an apartment building in which when you're on the first floor and you look up, you see a ceiling, but if you're on the second floor and look down, you see support. The floor is the same, it's simply what side of the fence or what side you're sitting on. We do need to see, traders, some effective closes above 1400 before I start labeling this a level of support. Now, this was a very, very key psychological level, and it went through this level quite easily. In fact, when I was looking at the market after the report yesterday and we were looking at this doji, dojis typically are significant of top and bottom indicators, a consolidation in the market, and they truly are telling you that there is a shift in the power. However, they need to be read much differently in gold, because what I've found in gold, as we've talked about over the last couple of weeks, is they're very good in terms of finding significant bottoms in the market. We've had great results by looking for that Three River Morning Star, and every time we saw that Three River Morning Star, we were able to effectively buy. As a matter of fact, we were able to peg this bottom of the market right here really on this candle right here. In other words, for those of you who have been with me, you recall that as this market came down, what we noticed was first we saw this black candle, and when we saw that black candle right in here, we noticed that we actually said if we see that followed by a doji character here, then we'll probably go ahead and take a stab. So we actually looked and saw the bottom right here. We got our confirmation, of course, on the following day. The trick on this particular trade was it took us roughly a week before it actually broke out to the upside. We didn't get instant gratification, let's say, and it wasn't until we saw this breakout right in here that we were convinced and we got the confirmation we needed that we had that upside breakout. Of course, it traded in a narrow range for a little while here, and then we had that utter beautiful breakout Thursday of last week. Market moved up. We really needed to see it go above that recent high that we had. That was the 1388. That's right in here. And once we took that out, it was pretty much off to the races. Traders, we are looking at a 30-minute chart. As you can see, it's approximately 8 o'clock in the morning in Honolulu, Hawaii, and we do have a pretty active market. For those who have joined our service over the last week or 2 weeks, we do use this shorter term intraday chart really to look at breakouts. It gives us an idea of when it makes lows, how it makes those lows, how it makes those highs. And so you can see, for example, I call this a channel. It's a very tightly defined trading range with highs and lows that are, as I said, very, very tight itself. And then the market will tend to break out. In this case, broke out and then broke down. And then we get this very, very nice trending market it meanders around and then trades lower, breaks out to the upside. And then the reason I wanted to show you this is we had this, again, this tight trading range in which it was trading just to the highs of around 1400, but was unable to break out. Now, I wrote an article in February's issue of Stocks and Commodities. I wrote 4 articles on gold this year for that magazine, and I labeled these particular activities right up in here as what are called scouting parties. Now, scouting parties are a term that Steve Nissan has termed, in which the bulls will go, in this case, and test the fortitude of the bears. And as you can see, we have our existing highs right in this area here. We then make some new highs, but they're unable to sustain these highs, and they're also unable to push these highs up above that ceiling. And that ceiling is really a psychological ceiling. That's at $1,400 mark. And you can see today this clear and utter breakout as it broke out to 1400 and just kept running. Now, over the last hour, it has been stalling, trading around 1405. But as I said, what is critical at this point is that it holds this 1400, and this 1400 now becomes a floor or support. As long as we get that, we're up and running to the mid and probably low to mid 1400s. And as I said, I will look to possibly revise our upside target. And let me spend a moment and explain why I'm looking at it at this point. I have gone ahead and put my daily chart back up, and the areas that you see in here are our basic areas of what is called a Fibonacci projection or extension, in which I'm simply looking at this wave 1, our typical benchmark, and then carrying that over to the low of this breakout right in here, the beginning of our 5th wave, and then projecting it to what areas it would go to. So that if the market was to have a equal move, which typically you see in the markets, that would extend it to about the 1422. Now, here's the key. There is absolutely nothing typical about the way gold is moving right now. We are absolutely in a complete and utter super bull cycle. So, that being said, it really wouldn't surprise me to have this 5th wave actually be larger than the 3rd wave. And if that's the case, and of course that's a big if, what I've simply done is taken a copy of this line, and I'm going to verify that it is a scalable line. This is auto scale, which means that it will move up with the market. And then if I extend that, of course, to the bottom of this, we are now looking at a possible new target. And this target is quite nice because the target now puts us at around 1460 to 1470. So that if we have, as I said, wave 5 be the same size as wave 3, or in fact, if it's bigger than wave 3, that's going to extend us not into the mid 1400s, but possibly higher. This could be really an extended rally. Now, one day does not make a market. We're going to have to see how the market trades in this area. But I can tell you this, traders, we do have a scenario right now where the market has taken off quite nicely. And as I said, what we really need to see it do at this point is to form that base, and on a closing basis, continue to form a base and find support at 1400. Then what we're going to do is, assuming the market continues higher, realize, traders, at any moment this dream can kind of end, and this rally can kind of end for us. But for right now, it's fully in place with quantitative easing, and the thought about a lower dollar is enough to really propel buying into the market, even during days when the dollar is strong. So it is trading with a mind of its own, and it is, I think, destined to go to at least the low 1400s, if not the mid 1400s at this point. And as I said, based upon these new calculations, in which we are looking for, in a Super Bowl cycle, the fifth wave to be the largest of the three waves, which does happen in commodities, we could easily see this market go higher than my first target projection here at 1422. 1420, we'll have to see where it goes. In any case, this has been a very, very amazing day, and we will just have to see where it wants to go from here. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the Daily Review. Bye-bye.